Bitcoin treasury companies will be the big bidders for Bitcoin over the next 20 years because they will be the preferred instruments by which TradFi capital comes to Bitcoin. And they will be the actors, the entities that go out and tap into these trapped pools of capital and give them what they're looking for. And the net result of that is like, who's going to be the buyer bidder for Bitcoin when Bitcoin is $5 million per coin? It's going to be MicroStrategy strategy. Future generations will be told by the millennials what worked for millennials, as that will be the new accepted wisdom. And I think that is stack sats. Stay humble. Focus on accumulating the hardest asset in the history of the world, which is Bitcoin. Bitcoin Treasury Company as a group could accumulate half of all Bitcoin. 20 years from now, Saylor predicts will be, that would amount to $140 trillion of value held by Bitcoin Treasury companies, probably half of which is held by strategy, and the other half is, all of the new entrants in their own capital markets all over the world that are popping up right now. Hopefully that includes.
Okay, welcome to another episode of Money, Markets and Mayhem. I am your host, Mark, and today with our guest, we are going to dive deep into macro, the revolutionary world of Bitcoin and Bitcoin treasury companies, and maybe a little bit of history. So joining me is my co-host, known only as JFK Nakamoto on X. JFK is a certified financial planner with a traditional finance background, but is deeply interested in the evolving intersection between legacy markets and digital assets, and regularly provides his personal insights and perspectives on crypto and crypto treasury companies on X. And our feature guest, if you haven't seen this guest speak before, I have no doubt that you've seen the famous chart which he is responsible for creating that features trillions in global assets today and where they are currently invested. This chart has even been used by Michael Saylor himself in many presentations. Jesse Myers, known online as Creasus_BTC, is a prominent Bitcoiner, investor, strategist, and advocate for the cryptocurrency space. And just this week, Jesse has been appointed head of Bitcoin strategy at the Smarter Web Company, a UK-based Bitcoin treasury firm. He is highly active in Bitcoin discussions and is featured on podcasts like What Bitcoin Did, the Bitcoin Matrix, and the Investors Podcast. We are delighted to have Jesse here as our perfect first ever guest today. How are we, boys?
Great, thanks.
Fantastic introduction. Thank you for having me.
I'll admit I was a bit taken aback when I emailed Andrew and asked if he'd come on the podcast, and he said, "No, well, Jesse might." And I thought, I've been flogged off to an intern, and then I realized it was the Jesse. And I guess it's what it feels like when you go to a bar and you hit on a girl and she says she's taken, but you can have my hotter, maybe more intelligent friend.
Oh,
I'm flattered, I guess.
I think that is I did my research too, and I think that's no doubt what we've got. And we are super excited to be speaking with you today. Lots to learn, lots to get into. Before we kick off, though, and talk about Bitcoin and Bitcoin treasury companies, which I'm sure we'll do, I just wanted to get your views on macro, how it all connects, lessons from history, and the understandings of how to see around the corner. Like you seem to be someone who has a prominent interest in history, especially with the framing. And so maybe give us your 20,000-foot view of where we're at today and how we got here.
Yeah, that's a fun place to start. So, I think that so much of coming to Bitcoin is grappling with the macroeconomic backdrop, the context of the fiat era, right? We're 50 years and change into the fiat era since in 1971 the U.S. went off the gold standard, and basically the whole world did at that point. And what has happened over that 50-year period is massive debt burdens have accumulated for sovereign nations and companies and individuals. We print money as kind of our solution to crises now. You can kind of point back to like the 2008 crisis as the last point in time at which we could have done the responsible thing and let bad debts wash out and have tremendous pain. Basically let the great financial crisis be a bit of a depression, really, and that would have washed bad debts out of the system. But we didn't. We chose the other path, which was let's just print our way out of this. Let's stimulate our way out of this. But the system has become addicted to that stimulus. And when you tell banks that they're going to be backstopped, that they're too big to fail, then they can go ahead and take all sorts of risks and be irresponsible, knowing that they're too big to fail. So their own, they won't pay for their own irresponsibility. And so that's kind of the context of where we're at. Like, if you zoom out enough to think about, like, what is the macroeconomic backdrop? It's, well, we in the U.S. we recently got to 129% debt to GDP. I think we backed off a bit to like 125 now. And that's an important number to think about because 51 out of 52 times since 1800 that a country has gotten to 130% debt to GDP, they eventually soft defaulted or hard defaulted on their debt, meaning they printed a bunch of money and reneged on their debt in real terms. The one exception is Japan and present day Japan, and basically they're circling the drain, and I think they're going to have to soft default by printing a bunch of money. So that's the context of fiat currency. It's also worth pointing out that if you look at the M2 money supply, I'm of course most familiar with the U.S. dollar in a U.S. context, but over the last 2-3 decades, we've maintained a CAGR of like 7% for that growth rate. Meanwhile, they tell you that inflation is 2 or 3%, while handpicking the basket of goods, for what they think sustains a lower middle class lifestyle, right? And that involves a lot of shrinkflation and substitutes, shittier quality products that are being touted as equally good, and in that way, the cost of everything drops, but you're sacrificing quality along the way. And so they tell you inflation's 2 or 3%, but I think that any family who goes to the grocery store and has been paying attention for the last few years thinks that inflation has been an awful lot higher. Michael Saylor models into his expectations for the next 20 years that it'll be 7-8% going forward every year, which is what we've seen in terms of money printing for the last 20-30 years. And I think that's really the true inflation rate in the world is the rate of money printing. It just takes some time for that money printing to show up. If you print today, some of that money printing shows up as inflation 6 months from now. Some of it shows up 18 months from now. Some of it shows up 4 years from now. It's just how it flows through the economy. So, it's hard to point at and say definitively that, this money printing directly caused inflation. But if you zoom out enough, that makes sense. The denominator of how much money there is in the world just increased. And so, the cost of anything follows suit. And so, it's important to paint that context because that's the world you're living in. And the problem with that, which Michael Saylor so articulately voiced, is that if you have cash in the bank, you're sitting on a melting ice cube. Because if the true inflation rate is the growth of the money supply, and that's 7 or 8%, but you're earning, in money market funds, you're earning, 2%. If you're in 10-year U.S. Treasury bonds, you're earning 4.5%. Well, you're actually destroying 3% every year in purchasing power just by holding bonds. And that's definitely not what you're told. You think that bonds are the responsible thing to do because they're generating 4.5% for you, but if true inflation is 7 or 8%, your ice cube is melting every single year. And I think that's the context in which Bitcoin needs to first be understood, right? Like, what are your options here? Your options are to plow your money into the S&P 500 or whatever stock indices make sense to you, in order to tread water on true inflation, because more or less the value of the stock market does track the growth of the money supply. But you're taking risks there. That means that you have a day job, and then your second job is to be an investor, and try to keep up with true inflation, which is money printing. That's not really fair or fun. So what your options are: do that, go chase returns in the stock market. Try to be an investor when it's not your profession, or turn to a money that is designed to not be printable, right? To have a finite supply of that will ever exist, and that's Bitcoin. And not only does Bitcoin have a finite supply, it's the invention for the first time ever of an asset that has an absolutely scarce supply, meaning that there will be a certain amount and then it will not be possible ever to make more. And that's different from any other asset in the analog world. Gold, real estate, even you dredge swamps or make sand islands as they do in Dubai. But yeah, you can't make any more Bitcoin. And then on top of that, it has the additional incredible property that I think is underappreciated, of increasing scarcity of new supply issuance. And I think that's the real magic of Bitcoin, because if you accumulate some Bitcoin today, 4 years from now, they will be making less Bitcoin every day than they are now. And it's so simple and so obvious, but when you decrease new supply issuance, but demand doesn't change, the price goes up. Like, this is Econ 101, and for some reason, it's the economists don't. They basically think it's too simple. That it flies in the face of the efficient market hypothesis, because it does. Because the efficient market hypothesis is wrong. Bitcoin's not wrong. The EMH is wrong. So those are your choices in this macroeconomic context of where we are in the fiat era. It's you can hold bonds and allow your purchasing power to be subtly eroded over time, even though you're being told you're making a positive return. You can chase returns in the stock market and just tread water, but you're taking on risk to do so. Or you can lean into learning about a deflationary store of value asset that has properties that are designed to improve upon gold's properties as a store of value asset, and it's early in its global adoption, because most people still don't understand it.
That exactly. I mean, that's probably a perfect segue to get into the famous chart that you created and is now being widely used online. But before that, I just wanted to mention that there is one other option that most average Australians, because it's our favorite pastime here, and Americans through the American dream choose, and that's to own property rather than rent, right? And many people will tell you, my property has gone up by 8% a year, so I'm keeping up with that money printing. But what you don't see with property are the hidden taxes, so the stamp duty, like in Victoria, where I used to live in Australia, they're ever increasing the taxes. They're now floating the idea of coming up with an unused bedroom tax. So if you have a house and you only use 2 bedrooms, that they're floating the idea of you getting taxed on that 3rd bedroom, right? And so with things like property and gold, it has a huge paper market, and you could argue that has been manipulated over the years, and maybe they're not going to be able to do it as much moving forward. There are all these other hidden taxes, which when you do the math and look at Bitcoin's CAGR since it first launched and what, we hope that it's going to do into the future, you're just breaking even versus outperforming. You're just surviving rather than choosing to strive. So yeah, I think that's interesting.
The other thing in there that people often forget too is that the value of the house in nominal terms goes up if you're applying a maintenance. If you keep that house in good condition, which is expensive, and that's like carrying cost of a physical asset are real, and for a digital asset, they're de minimis.
Well, the land goes up, but to your point, the house actually depreciates.
Yeah, right? That's one thing I learned, early on in accounting school. I got an accounting degree along the way too. But yeah, you learn that land is a scarce asset that appreciates, and buildings depreciate, and it's maintenance that you pour in maintenance just to tread water with that the value of that building.
Would you like to take us through the famous chart, what the inspiration for creating that chart was, and just talk us through it in your words?
Yeah, I guess it's been a while since I've teed it up, so let's see how I do. Where it came from is I was a management consultant for 4 years at Bain & Company, and you learn the sort of the classic management consultant toolkit. And one of the tools in that toolkit is market sizing, which becomes relevant for if you're doing a project for a company that's trying to figure out, should we expand into Mexico? It's like, well, I don't know. Where do you start with that, right? Well, the right place to start is to size the market, see like how big is the opportunity in Mexico, and then you go about assessing like how much of the market can we win, right? So that's you want to establish what's your TAM, your total addressable market there, and then you want to assess, realistically how much of that market share can we win. So that's pretty classic exercise there. And I realized when I was going down the Bitcoin rabbit hole, really in kind of 2019 into 2020, that was when I realized, oh, this is a lot bigger than I thought it was, and this is the future of money. So in that context, I realized like I needed to figure out for myself like how much value is out there, and then how much value do I think Bitcoin can win, if the same sort of exercise. So that was the premise, and pretty quickly I realized that there just wasn't any good data about like, here's how much value there is in the world. And so it turned into, a different kind of classic management consulting exercise, which is triangulating good numbers by piecing together, reputable sources, collecting several data points for each top-down element you're trying to size. And then, just kind of logically using those to triangulate, find something in the middle, and then sense check to see that is a reasonable estimate, right? And this is all rough, right? Like none of this is precise. You're going top down rather than building bottom up, because that's part of the problem, I think, with numbers like this is people typically try to build from the bottom up of like, well, I know that, the U.S. corporate bond market is, has this much value in it, but you're missing all the other, global debt pieces. So if you want to understand how much debt there is in the world, you got to go top down rather than bottom up. Anyway, so that exercise turned into my chart that I first put out in 2022, the global asset landscape chart. At the time, it totaled up to $900 trillion of global asset value spread across different buckets, like your classic highest level asset categories. So, equities, bonds, real estate, money, and then art and collectibles and gold, and then Bitcoin is this tiny new player on the scene. And I did entirely omit like other commodities, because their above ground stores are actually quite small in terms of value. They tend to get consumed. That's part of what makes gold special, is it doesn't get consumed. And derivatives is kind of a red herring, because the notional value is gigantic, but the settled value is pretty small. And there's a lot of variability in terms of estimates, so I just excluded that. But, my goal was to really figure out like what are the store value asset buckets in the world.
It's like kind of like the spot versus options and everything else, right? It's like property.
What's the actual asset value? Yeah, rather than derivatives on top. And yeah, so that resulted in 900 trillion. I put together, this was part of, so then the next step was, okay, and then how much of this can Bitcoin win? And that turned into this piece I put out called Bitcoin's Full Potential Valuation, which I put out in early 2022. And the thesis there, the thrust of it was that, you take each of these asset categories and then you think about, well, is Bitcoin going to take any investment value from each of these buckets? And the thing about Bitcoin is that everything is in scope for Bitcoin, because it's not that Bitcoin is like competing with gold specifically. It's that Bitcoin is competing with other forms of store of value. And people store value in every asset category on that global asset landscape chart. So it's all in scope. Bitcoin is competing for value itself. So all value is a total addressable market, really. And then I went line by line through those buckets and thought about on a relative basis, how much does it feel like finger in the air Bitcoin could steal away from these, with my thesis of like Bitcoin has better properties as a store of value asset than any of these analog buckets, for some of the reasons we've discussed and more. I forget the exact percentages I put out, but 30% of the bond market, which I think is actually extremely conservative. And then, 15% here, 20% there. What does it add up to, of the value in each of those buckets? And it added up to 200 trillion, which, since there's only going to be 21 million Bitcoin, that comes out to $10 million per Bitcoin. And that was the analysis I put out. And then Michael Saylor read it, liked it, retweeted it, DM'd me about it. And then a few months later, he started using that chart as kind of a jumping off point for his presentations, which surprised me a little bit. And it sort of has surprised me how much he has used it. Incredible honor. And I only recently, I'd say in the last 6 months, really since the launch of his preferred equities for MicroStrategy, now I understand exactly why he liked that chart so much, because it really serves as a map for someone in his shoes thinking about, where do I tap capital in order to bring it in as dollars and buy Bitcoin with it. Like where can I source that capital? Where does all that capital live in the world? So it's a really helpful starting point for teeing it up in that way. And I think it's part of why he has used it so much is, the preferred equities are designed to tap into the bond market, the fixed income market. MSTR itself with the ATM is designed to tap into the equity market. And now with Stretch, it's designed to tap into the money market, and so he's got taps, pipes that he has put into each of these big buckets on that chart, and his Bitcoin Treasury Company, MicroStrategy, is designed to pump the capital that's trapped in those analog buckets getting not great returns, to pump it into Bitcoin by offering that capital better returns. So instead of 4.5% in U.S. Treasury 10-year bills, he's coming out and offering 8 to 10%, and that's going to win market share over time. And he can offer 8 to 10% because his strategy is backed by Bitcoin, and Bitcoin has a 30% CAGR going forward for the next 20 years. I think he thinks it's in his model, which is based on the full potential valuation framework. So that's where that came from, and that was the exercise I set out to do. I didn't really expect it to end up becoming a staple for how do you put Bitcoin into context in the global asset landscape, and how do you show that it's still very early. And I guess that's probably the most important number that I skipped over. But as of today, I did a recent update for 2025. There's now $1,000 trillion of global asset value. Bitcoin is 0.2% of that. So it's a $2 trillion asset class in a $1,000 trillion ocean of value. And I think that chart is pretty effective at forcing people to think, is Bitcoin going to stop at 0.2% of global asset value, or will it grow? And it's pretty easy to make the case for the digital store of value asset in the digital era to grow well beyond 0.2% of global asset value.
100%, and thanks for such a descriptive and detailed explanation. I that was one question I really wanted to ask you, because I think it's so important for people who are just entering the space for the first time to kind of enter with that context. And I think one of the reasons the chart was so successful is because it probably shows you the proportion of people in the world who are visual learners, and rather than auditory, or rather than reading, they're able to see through an image, and that image is so powerful. So many things I could say. The things that you often hear is that Bitcoin is in a bubble, or that Bitcoin may grow to overtake gold. But I think some of those things are missing the forest for the trees. And if you look at bonds, which is the second most held store of value in that chart, 318 trillion versus 370 trillion. This is, I'm not sure if this is this is updated.
Yep.
In real estate, 370 trillion in real estate. One could argue that the largest bubble of all those assets is actually bonds, because since 1981, when interest rates peaked, interest rates have been coming down. And if you understand bonds, you know that when interest rates come down, the price of the bond appreciates. So we've been in a 40-year bond bull market, right? And I don't think, especially people new to the space, but I don't even think a lot of people potentially on Wall Street who just do equities and don't understand bonds really understand the magnitude of that somewhere that bubble needs to burst, or someone needs to pay for that bubble. And it might not be in the price of bonds depreciating, but it could be in everything else appreciating versus bonds, right? So this, we might look back in 10 years and it still be 318 or 400 trillion in bonds, but the new net asset value is 2,000 trillion, right? And I think I often find that people who don't get Bitcoin don't really understand sovereign debt.
Yep. Yeah. A few things to add there. So when I did the 2022 original chart, and then I updated in 2025 with the same, I went through the same exercise, kind of from a fresh slate. And then the numbers that I, came up with for, how much value is in each bucket in 2025. And then I was able to show the growth rate between the 2022 version and 2025 version. And everything grew 7% in total. but the bond market grew 4%, right? So on a relative basis, the bond market shrank 3% in terms of, its relative position on that chart. And of course, the two buckets that grew tremendously fast were Bitcoin and gold. Mostly Bitcoin was like 100+% CAGR over the last 3 years, and gold was like 20% CAGR. Really good still, but and money was the other bucket that also shrank on a relative basis, but nominally everybody's making more money.
Right.
And I think that's the other thing that I'm feel passionately about is the 60/40 portfolio is this bit of wisdom that we've received from the boomers. I think the reason that's accepted wisdom is because that's what worked well for them. So what gets passed on to future generations is whatever worked well for that generation. And in a 40-year declining interest rate environment, what does well is equities and bonds. So and real estate. So get your mortgage and max out your 401k and get your bond portfolio, and that works over the last 40 years. But once you hit 0% interest rates, like that trend is broken. You can't continue that. And so millennials and later generations are being told, just get a mortgage and trust in the 60/40 portfolio. It worked great for me, right? And that's what we're all told. And it can't work. It won't work. And bonds, I think, is the biggest problem in that math, because all the reasons we've talked about, they will lose in purchasing power, and whereas for the last 40 years they have gained in purchasing power as interest rates fell. So I think taking that forward, I think that what will happen is that future generations will be told by the millennials what worked for millennials, and as that will be the new accepted wisdom. And I think that is stack sats, stay humble, and focus on accumulating the hardest asset in the history of the world, which is Bitcoin, and don't have a bond portfolio, and don't put so much stock in real estate or equities, but instead what works is accumulating Bitcoin. So I think that will only be clear 20 years from now. That which millennials did best? Oh, the ones that accumulated Bitcoin and ignored the 60/40 portfolio, generally. And so that will become accepted wisdom, but only because of the experimentation that brave millennials go through today.
It's funny because we've spoken a lot about the 40% of the 60/40, but the 60% index funds are also at risk. And this is something that Jim Carson talks about a lot. He says, if you go back and study, and this is what, everyone, or the nerds like us will probably do, is you go back and study the 60s to the 80s when interest rates were rising, and you'll notice that passive investing actually wasn't the popular. Passive investing was started long ago, but during the 60s to the 80s, it didn't work. And it's for a lot of the reasons that we've been discussing today, right? And we're not saying that equities are going to go down or they're not going to continue to go up in nominal terms, but versus assets like gold and Bitcoin, they may be more challenged.
And I think, and I actually have the original when it was 1.3, and had it on my desk for a few years, and every time, even for me, and I know as much as pretty much everything about Bitcoin, if I was ever going, should I buy more? It seems expensive. I would just look at that tiny little blip. And yeah, so I think if people could get that visual, they see 120,000 Bitcoin and they go, that unit bias is too expensive. But if they actually saw Jesse's asset class map, it puts it in perspective just how small it really is when it's a finite asset and you can't print any more of it.
Yeah, but it's so interesting how, most of my friends my business school friends certainly, they very much view Bitcoin as something they missed, because it's over $100,000 per coin now, and it's such a shame that when I say like it's going to 10 million, they laugh, right? Like I'm sure that they would have laughed if 5 years ago if I said it was going to 100,000. In fact, they did, but I said that then, and now I say it's going to 10 million eventually. That's the unit bias that people, fall victim to.
Do you think it's harder to orange pill people that do have that high qualification in finance and might be more analytical? Do you think it's harder to orange pill them? And it kind of goes back to Saylor's need to know about Bitcoin, because unless you're getting crushed by inflation, unless you're noticing that you're earning more but you can't buy as much, you're already wealthy, you don't really have a need, even though they could greatly benefit from it. Do you think that is what the barrier is to orange pilling your friends who are at Stanford with you?
Yeah. I wrote a piece called "Why the Yuppie Elite Dismiss Bitcoin" back in 2020 because I was so frustrated with how my conversations about Bitcoin were going with my Stanford MBA friends. They were the super resistant, borderline hostile to the idea of Bitcoin, and I think it was because they were so accustomed to what they had learned in school and in work about money and about value and investing and about the world, and you get very invested in that worldview. And you trust it too. And so that's kind of the crux of that piece, is that Bitcoin maximalism is not an IQ test per se, but I tend to find that people who are Bitcoin maximalists are smart, but also distrusting of the system. And that people who are smart and trusting of the system are the ones that believe in Bitcoin the least. And those are kind of my MBA friends and people who work in finance. They are invested in the system. They believe it. They believe they have the edge in terms of investing knowledge, how the world works, and all that. And they're not open to being told that they're wrong, right? Whereas if you get somebody who doesn't have that background and you tell them, you could present both sides of the argument, right? And you could say, "Oh, the money supply has been growing at 7% a year, but they say that inflation is 2% a year. However, the Bitcoin perspective is that inflation is actually probably 7% a year, and they're just kind of massaging the numbers, and quality of life is getting worse." And now choose between those two explanations, which resonates with you. I think people who haven't been trained in the traditional system pretty quickly say, you know what, Occam's razor, this one feels right. It lines up with the incentives in the world, and it lines up with personal experience when you go to the grocery store. So I think everybody who talks about Bitcoin with their friends experiences this in some way, where the people who are in finance, the people who have the best educations, are the most closed to being, to learning about Bitcoin, because they think they know better than you, basically.
Hey, Jesse, you've mentioned that you think, this is probably a perfect segue, but you've mentioned that you think that 50% of the world's Bitcoin will be held by treasury companies. Can you talk us through that, how we get there, and what the world looks like if we do? Maybe talk about smarter web a little bit more.
Yeah. So I think one of the interesting things from business school was there was just one class where a VC titan came in and talked about his experiences in the early days of venture capital, and at the end of his lecture, a classmate of mine asked, "What's the new thing that we can do?" And he said, "There is nothing. The best thing you can do is come work for me." And and that struck me. Like the class seemed to be satisfied with that. Like, oh yeah, that makes sense, right? But to me, that was like, wow. I guess even when you've lived through a revolution in finance, you are unable to imagine that there could be subsequent revolutions in finance. And I think that, Bitcoin has been the thing that nobody saw coming for the last 16 years that has been quite revolutionary and has been the big story in global finance, I think, over this, 2-decade period. And because of the mechanics of Bitcoin treasury companies, I think that the big story over the next 20 years is going to be in global finance is going to be Bitcoin treasury companies. And I think that they are uniquely set up to be the preferred conduits by which TradFi capital, these big buckets that I outline in that global asset landscape chart, how that capital will flow to Bitcoin. And it's because Bitcoin treasury companies are creating products to facilitate that flow of capital by meeting that analog capital where it's at and offering the kinds of products that it's looking for, just better because it's backed by Bitcoin. So, what strategy has pioneered now with preferred equities in the fixed income market is I think the perfect example. We've established like fixed income capital is getting shitty returns, getting like mid-single digit returns in a world where true inflation, I think, is like 7%. So you're treading water at best, and realistically, you're destroying value holding bonds every year. And then along comes Michael Saylor saying, I will offer you 8 to 10% if you give me your dollars that, basically sell some of your bond portfolio, and now still within the fixed income mandate, the fixed income role in your portfolio, agree to this fixed income contract where you will get 8 or 10% depending on the instrument. And he's happy to do that because he's going to turn around and take those dollars and buy Bitcoin and get 30% a year for it. So he's happy to service that debt at 10% a year. But nobody in the fiat world can do that, right? Like a fiat bond can't offer 10% unless it's a super risky company, and then risk adjusted, it's not 10%. It's still mid-single digits. So that right there is like a microcosm of what I think is going to play out, is that Bitcoin treasury companies are able to design products to offer investment capital, institutional capital, and also for individuals who are just looking, to fill certain roles in their portfolios, offer what they're looking for, but better because it's backed by Bitcoin, because it's powered by Bitcoin. And so what I see happening is strategy is a capital pump that now has little pipes into these capital pools, these buckets, and is going to be siphoning value out of them and buying Bitcoin with it. So that value goes into Bitcoin by way of strategy. And that can play out until Bitcoin has fully monetized. Basically, until Bitcoin has reached all store of value capital. Because until that point in time, there's capital in these buckets that's looking for what's the best store of value asset to propagate my value into the future undiluted and hopefully appreciate its purchasing power, in that time. And Bitcoin is the best thing in the world to do that. So Bitcoin will continue to eat market share until it has saturated all of the store of value capital that's looking for that function in the global asset landscape. Saylor has said that's 50% of my chart. Maybe it's 20%, maybe it's 50%, but it's not 0.2%.
Yeah.
And so this process that, this is hyper Bitcoinization. This is the process of Bitcoin monetizing, and it's still extremely early. But I think, when you think about the mechanics of a Bitcoin treasury company and what Bitcoin treasury companies are equipped to do, they are the ones that will be able to create products for the capital in these buckets, like the money market, where Saylor has now created a better version of a money market fund with Stretch. It's the same thing. You're not tying up your dollars, but you're getting 8% returns. I forget, 9% is what they started it at. It's insane. But I think the demand for that will be through the roof. Same idea in the bond market. Those are the two big buckets that are already deflating relative to everything else, and that's because investors are slowly figuring out that true inflation is higher than the yields you can get with products, with fiat bonds and fiat money market products. So all that to say that, I think that Bitcoin treasury companies will be the big bidders for Bitcoin over the next 20 years because they will be the preferred instruments by which TradFi capital comes to Bitcoin. And they will be the actors, the entities that go out and tap into these trapped pools of capital and give them what they're looking for. And the net result of that is like, who's going to be the buyer, the bidder for Bitcoin when Bitcoin is $5 million per coin? It's going to be MicroStrategy, because their fixed income products are better than anything else out there, and they just unlock the next $1 trillion of bond market capital that finally decides I want to get out of my 4.5% yielding bonds, and okay, fine, it's proven enough. This whatever this strategy vehicle is, it delivers 8% without risk because it's extremely over collateralized. I will shift my capital to that, and so Saylor strategy will be accelerating the deflation of the bond market, the fixed income market, and accelerating the inflation of the Bitcoin thimble in this global asset landscape into something much bigger. And I think that story plays out in every capital market in the world. So, in the US, strategy has that locked up. They will be the preferred name, the blue chip brand for how you go and get a Bitcoin powered product for whatever you're looking for, whether in fixed income or money market. And they'll have them all, and they'll be the lowest risk place to do that, and they will get the lion's share of the capital as a result. But in every capital market in the world, there's a home court advantage. So in Japan, Metaplanet has popped up. It's plugged into that regulatory environment, and it is more accessible to capital there, especially retirement account capital and institutional capital there. And so they're repeating that playbook, and with great success, and they're on their way to becoming the strategy of Japan. And the company I'm a part of, SmarterWeb, is on track to do the same thing in the UK. We are the first Bitcoin treasury company in the UK, the leader, and we are on a path to repeat, hopefully, the Metaplanet story over the next year. That Metaplanet's about 16 months into their journey. We're about 4 months into our journey. So, hopefully we follow that same trajectory. We're actually, going faster than Metaplanet did in their first 4 months, considerably. And so we'll see if we can keep that up. I think the market is more ready for this kind of playbook now. So I think things will probably move faster than they did for Metaplanet. And hopefully we can just continue on that track to grow into the balance sheet that's necessary to then offer the strategy-like products to tap into the fixed income market, the money market, and all these little trapped pools of capital, and bring them to Bitcoin. And again, so happening in the US, happening in Japan. I think we're on track to do that in the UK. And I think it will happen in every capital market in the world with like a homegrown hero, a domestic solution that is plugged into the regulatory environment and the institutional fabric of that capital market in a way that, Strategy is not, MetaPlanet's not, Smarter Web won't be, in the other capital markets in the world. So I think that's going to be the big story for global finance over the next 20 years that nobody right now sees coming. It's quite obvious to me, but I've been immersed in this in Bitcoin for so long and in Bitcoin treasury companies for long enough now that it seems quite obvious. But most of the world thinks that Bitcoin is silly still, let alone this Bitcoin treasury company idea. It probably seems like a fad, but I think it's here to stay. I think it's going to be, I think it's going to grow into the biggest industry by value in the world. And I think it could accumulate, Bitcoin treasury companies as a group could accumulate half of all Bitcoin, which 20 years from now, Saylor predicts will be, that would amount to $140 trillion of value held by Bitcoin treasury companies, probably half of which is held by Strategy, and the other half is, all of the new entrants in their own capital markets all over the world that are popping up right now, and hopefully that includes Smarter Web as the leader in the UK.
Well, it's an important point that I don't want people to miss as well. It's like, I don't think it's just, you said you hope, but I don't think it's just hope. It's like the world belongs to the builders, and you're out there kind of putting your money, effort, and your most valuable thing that you have, your time, into building that future, right? And there's often many people out there that have an opinion on things, but they haven't built anything. And it's like, yeah, we can sometimes get it wrong, but hey, let's just at least go out there and try and build that future, right? How many times people like Bezos and Musk and whatever have been laughed at, only to, people then keep quoting stories that if they had invested 10,000 at IPO, it would have been worth 27 million or whatever it might be. So you've mentioned that you think there's going to be, and just by the way, I've got the chart and I'll throw it up now, that I think you guys, Smarter Web achieved, so this is for Bitcoin treasury companies starting at zero, not at the companies that acquired 42,000 Bitcoin through a private entity or whatever on day one. So the guys that started at zero through this strategy, you guys, I think, achieved 2,000 in under 100 days. And MetaPlanet, it took something like 250 days. So there's some, the pace of adoption is getting quicker and quicker. Before I get onto a few more questions around about treasury companies, MNAV, and things that are floating around today, those buzz terms, what do you think is going to be the tipping point for the preferred equity strategies that you've mentioned, Saylor, launching, and hopefully MetaPlanet and Smarter Web, if you're an investor, launch as well? What do you think is going to be the tipping point for adoption of those?
Yeah, I think it's going to be a lot like Bitcoin, in the sense that it's gradual but exponential. I think Bitcoin has superior properties as an asset to anything else out there, but it takes time for people to learn about that, right? Like for me and for everyone, I think it takes a few touch points before you go from, okay, that sounds stupid to, okay, the third person that I respect has mentioned Bitcoin, I should probably look into it. And like that's what it takes, right? We're social creatures. We need that social proof. But then you learn about Bitcoin and you realize, oh, it literally has the best properties of any asset in the world. And I'm more bullish on that than any other asset. So I'm going to buy some, and then I'm going to tell my friends about it. Right. So there's this inevitably a positive viral coefficient, for anything in the world that's good. It's like, that gets you excited. You end up telling people. And I think that's probably the same for these preferred equities, right? Like they will sound too good to be true up front, right? Like, so you're telling me there's a lower risk fixed income product than U.S. government 10-year bills, but it pays almost twice as much in yield? That can't be true, right? Like that's inevitably going to be the reaction for the first time you hear about this. But I think the mechanics of it are sound, and it's because it's all powered by Bitcoin, and Bitcoin makes it possible to service at 10% a year, interest expense, dividend expense. So people will eventually hear about it, and eventually word will spread, and eventually it'll be lindy enough, right? It'll have staying power enough that people will trust that it's not a house of cards. And then, you end up with exponential adoption, really an S curve of adoption that, the first half of that is exponential. And yeah, so I think that over the next decade and really 2 decades, global capital will go from total disbelief about, these preferred equity instruments as a better choice than U.S. government debt to full believers that, of course, Bitcoin powered bonds are a safer bet and can pay higher interest rates than the U.S. government, which is, drowning in its own debt, and has a lower credit rating than strategy in the future when credit ratings wake up to, how over collateralized they are and how actually safe Bitcoin is. So yeah, I think it's just a gap between people's perceptions right now and the reality of the mechanics, and eventually that gap closes because people are smart enough to figure things out. It just sometimes takes 2 decades.
Exactly. It's like, a lot of the TradFi guys on X that might have been poo-pooing Bitcoin 4 years ago, saying it wasn't going to make it, now accept that it's not going to go away, but it's like they still haven't really taken the orange pill, as we say in the crypto space or Bitcoin space. And it's like you ask yourself, at what point are they going to say, and it comes back to your chart, it's probably once it reaches a critical mass in that chart, like gold of 20 trillion, for example. But it's like, at what point will they say, oh, it's not just not going to go away, it is as important as gold. And a lot of this, I guess, does come back to the number go up. If Bitcoin's number continues to go up, people will become believers, right? It's got a funny way of making them believers.
And that's why I think it's underappreciated how Bitcoin's increasing scarcity underpins everything in my book, because it not only does it mechanically cause the, where supply and demand meet, on the Marshall Cross, that goes up over time as you decrease new supply issuance. But then there's the game theory of that. Like, as you learn about that and you wrap your head around, wait, they're going to be making less of this in the future permanently, and then eventually no more. But I can buy some today when they're still making a good amount, and the market, doesn't have that sort of rabid premium that they'll eventually be placing on every unit of supply because they're making less in the future. I think that's like the prime mover of Bitcoin's monetization is the fact that it has increasing scarcity, terminating an absolute scarcity. And when you wrap your head around that, you want to buy some now and hold it for the future when it is more valuable. And every 4 years you hold it, that keeps playing out. So I think it all comes back to those properties, and then those properties unlock everything about, shifting value in the global asset landscape from these traditional buckets whose properties approximate what a good store of value asset is, But then Bitcoin is this digital perfection of what you actually want in a store of value asset. They're making less of it, every 4 years. There's only going to be so much, and then nobody can make more of it. And there's no carrying costs for it, and you can teleport it around the world. It's perfection of, store of value assets. And that design causes what we're now living through, which is a global repricing of store of value assets, because Bitcoin's better than anything else out there. So how much of that will it win?
And that's without going in or down the rabbit hole of why the previous administration were trying to slow it down, why the current administration is trying to speed it up, and the whole Genius Act, the importance of stable coins, why it's in the government's best interest for the crypto price or the Bitcoin price to go up to increase the use of stable coins, and the war against China on payment rails, right? I mean, there's so much more to this story than just number go up and just transferring from other assets into Bitcoin. So before we finish up, I do want to ask about dive a little bit deeper into treasury companies. There's terms like MNAV and Bitcoin per share. The two biggest burning questions that I have as an investor in the Bitcoin treasury space, full disclosure, is how important is MNAV above 1, MNAV above 2, MNAV in general, and what else should we be looking for when deciding which of these companies to invest in?
Yeah, I think about it, I guess there's sort of three things that I think people should be looking for. The first, probably easiest to cover, is life cycle stage. I think that there's a lot of Bitcoin treasury companies that have popped up who claim they're going to do, run the playbook and become real players. And a lot of them never get off the launch pad, right? They never get the mechanics going. In the UK, there's like 25 Bitcoin treasury companies, and I think most of them don't have any Bitcoin still. And so I think that the first thing is like to filter out anybody who's still in the unproven stage of their life cycle. I think that's just kind of a prudent thing to do. Well, you can make your own decision, but that's how I think about it. The second thing that's important is MNAV. And I guess the third thing that's related to MNAV is what we've put out called PBID. And so what is MNAV? MNAV is a premium that investors are paying for a slice of the balance sheet today. So, a Bitcoin treasury company's balance sheet is Bitcoin, but they tend to trade at a premium, right? So you tend to pay 2x the value, or for example, 2x the value of the Bitcoin on the balance sheet in terms of, your ownership and, your effective Bitcoin ownership and what it costs you up front. But that's for a good reason. And I think it's something that Bitcoiners even have trouble understanding, because why would I pay 2 times, the market price for Bitcoin? But what you're really signing up for is a Bitcoin yield journey. And so that's the whole goal of a Bitcoin treasury company, is to deliver Bitcoin yield to shareholders. And that means growing the amount of Bitcoin per share for that company. And that's a story of compounding, right? So, if you're buying Bitcoin, if you're raising capital and buying Bitcoin and you're doing it every 2 weeks or so, that means that, and you add 10%, plus 10% Bitcoin per share. And then you do that every 2 weeks, you're doing that, 24 times a year of 1.1 times 1.1 times 1.1, 24 times, and that compounds tremendously. And so that's why you're paying a premium for a Bitcoin treasury company, and frankly, you should be willing to, if that math is reliable, if you think that that Bitcoin treasury company is going to be able to continue adding Bitcoin per share into the future, it compounds very quickly. And then, so that's just MNAV in general. And then PBID is, I think, for me, I put it out, so I guess I'm biased, but for me, that's how I think you can compare Bitcoin treasury companies' valuations against each other, and then also against traditional equities.
Can you give us an explanation of PBID?
Yeah. So the idea there was, in traditional equities, you have the PE ratio, price to earnings, and typical PE ratios these days are like 20, 30, 40. And that means that what you're paying today, it will take 30 years of earnings for the price that you're paying today to be made up, to be earned back in future profits. And that's a lot. That's a lot. And obviously that's the traditional framework is to focus on the income statement as the source of, shareholder value delivery. But Bitcoin treasury companies are focused on something different. They're focused on expanding the balance sheet, growing the Bitcoin per share on the balance sheet. And so, I came up with the equivalent sort of metric, in my view, for the PE ratio, which is really, PBID, price over Bitcoin yield delivered. It's really more complicated because there's some log terms, but it's the heart of the idea. And the idea there is, okay, so if you're adding 10% of Bitcoin per share every 2 weeks, and you do that, you do that for a year. I don't know what that math comes out to in terms of, positive Bitcoin yield, like how much you've increased Bitcoin per share over the course of that year. It's unfortunate I don't off the top of my head know this, but let's call that like 500%, right? And that's over a year, and your MNAV is, call it 10, right? So this is like a small, incredibly fast growing Bitcoin treasury company that's been operating for a year. Nothing actually sort of fits this bill, but we're keeping the math simple. So their MNAV is 10.
Metaplanet did get to what, 7?
Yeah, this is Metaplanet-esque, I guess.
Yep.
And what was Smarter Web's MNAV when you bought it, Mark?
I think it was like in the 40s.
It got up to 20 very briefly.
Was it? Okay.
Yeah. So anyway, so in this scenario, if a Bitcoin treasury company is trading at a 10x MNAV, and over the last year they've added 500% Bitcoin per share, then this formula PBID attempts to it isolates how many years will it take if the recent performance is continued into the future. How many years will it take to grow into that MNAV, to basically to have Bitcoin per share grow 10x? And I guess that math, because it's compounding, right? That's not 2 years. That's like a year and a third or something, because you would go fast, or a year and a half. That would go fast for the second year because it's compounding on top of what you've already built. So your number there would be something like 1.5 years to grow into the MNAV if you assume continuation of growth over the last period. And that's a direct comparison to a PE ratio of 30, right? But it's 1.5 for the Bitcoin Treasury Company in this scenario. But that's, it's different. It's a different way to generate value for shareholders. You're not doing it through the income statement. You're doing it through the balance sheet. And ultimately, at the end of the day, that is what the goal of income statement profits is to grow the value of the balance sheet over time as those profits are accumulated. So Bitcoin Treasury companies are able to deliver value to shareholders much faster than traditional equities because these mechanics make it possible to grow Bitcoin per share at a very rapid pace. And ultimately, this is all just because in that global asset landscape, equities are overvalued, and global capital has been bid, across these buckets it's all overvalued, and capital is seeking value, and Bitcoin offers tremendous growth and value, and Bitcoin treasury companies are tiny still, and they are seeking to tap into the overvalued equities markets, and then eventually later also the fixed income and money markets through preferred equities. But you can pay 53 PE ratio for Nvidia, or you can pay right now like a 2 PBID for strategy, or 0.5 PBID for Metaplanet, or I think it's about 0.2 PBID for Smarter Web right now. And it's up to the investor to do that analysis and see if that makes sense to you. But that's how, at this point, how I view relative values, and where is there value to be had in global equities. At this point in time, I think it's in Bitcoin treasury companies, a well-run Bitcoin treasury company, because there's a lot that won't get off the launch pad, but a well-run Bitcoin treasury company offers tremendous value generation for shareholders because of these mechanics and how quickly they play out versus the traditional norms of waiting 20, 30 years for income statement profits.
Hey, two quick questions. The first one is there anywhere that there's a written framework of the PBID? Like, is it on your X account?
Oh, yeah. If people are interested in that, you can go to the smarterwebcompany.co.uk and you go to the investors top right corner. There's an investors section of the website, and you go find research, and the PBID report is right there, free to view. And yeah, I think, I'm excited about that framework. Has started being picked up by some Bitcoin treasury company analysts to assess the relative valuations of Bitcoin treasury companies. I think the real value of PBID is for highlighting how much more attractive they are, Bitcoin treasury companies are versus traditional equities, in their PE ratios. So hopefully that becomes a more common thing for people to spotlight, just how much better a Bitcoin treasury company is at delivering value when well run.
It's funny because you mentioned you mentioned, just on all that, obviously not a recommendation to buy, but if you are, from wherever you are in the world, if you are looking at investing in Smarter Web Company or other Bitcoin treasury companies, I can't give you exchange recommendations, but ChatGPT does an amazing job. If you just ask it, how can I invest in this company in my jurisdiction? ChatGPT does an amazing job of telling you which brokerage has access to it. But I was going to say that also, you mentioned that equities are overvalued, and a lot of the times when people say that, the immediate thing that people think of is the Mag 7. But I was recently listening to Howard Marks, and he basically said, we're potentially in the early innings of a massive equity bull run, which could be more like 97 rather than 99. And he said, in his opinion, and maybe he's talking his book a little bit, that he doesn't necessarily see the problem in the Mag 7, maybe except for Tesla, whose PE is like wild, because they're continuing to grow earnings, right? But the problem is the rest of the share market, who has no lever or no vehicle for sustained growth. So you've got the Mag 7, and then you've got the Bitcoin Treasury companies that have this thesis that we've discussed in detail today. But ask yourself, what is the thesis for all the other companies out there who aren't building robots or AI technology? All right, like maybe energy is worth looking at, all right? Because I largely think that Bitcoin is a digital store of energy. So maybe energy, and that's going to be required for the build out of all the future that we're discussing. But what else is worth, what else is going to continue to be able to grow and expand PE? And it's a really tough question to answer.
Yeah, I have no idea. And
yeah,
I guess part of the problem of being so deep into Bitcoin for long enough is I really don't know. Like I've long ago sort of come to the conclusion that Bitcoin is the thing to focus on, and it's tough sledding to find value in the traditional equities markets. And I think Bitcoin Treasury companies are a great example of that too. Of when you run the numbers, it's like, wow, this is deeply underpriced if these mechanics are real and sustainable, and I think they are. So we'll see how it plays out.
Hey, Jesse, another thing that JFK and I were looking at is Bitcoin per 100K invested. So trying to break down and this is as a relative way to compare Bitcoin treasury companies. So if we were to invest 100,000 in Strategy, or 100,000 in Metaplanet, or 100,000 in Smarter Web, how much Bitcoin are we receiving per that 100,000? Do you look at that as a metric that's worth giving any consideration to, or it doesn't take into consideration a lot of the growth factors?
Yeah. So I guess what you're sort of just reframing MNAV in a more tangible way, which is a good idea.
Yeah. Okay.
but I think that that's why I think that PBID is helpful, is because what a Bitcoin treasury company investor should care about is how quickly Bitcoin per share can grow for them, and comparing that against the MNAV that they're paying for that growth engine.
Yeah.
So if like right now, Smarter Web, there's been a global contraction of MNAVs, over the last 2 months in the summer here for Bitcoin treasury companies everywhere. And our Smarter Web's MNAV right now is 2. And over the last 30 days, we've added plus 50% Bitcoin per share. So, it doesn't take long for it, if we're able to continue that or anywhere near that into the future, it doesn't take long to grow plus 100%, which is what a 2x MNAV is. And the PBID ratio like spotlights that, right? Like how long does it take to grow into a 2x MNAV if you're growing at 50% Bitcoin per share per month? Again, it's actually a little less than 2 months in that scenario, because it compounds. And that's why PBID is nice for showing like, okay, the MNAV may be higher, but if they're able to deliver a lot more Bitcoin per share, that could be a higher value, quote unquote, investment than something that has a lower MNAV, but they're delivering a lot less Bitcoin per share. So it's helpful for combining those two variables to see how things shake out for various Bitcoin treasury companies.
And that's why I think the trust in the management team is so important as well. And what I've found remarkable is even with Saylor, but the amount of access that you guys are giving the market and the amount of transparency that you guys are giving the market. Like you ultimately can't control price on a day-to-day basis, but you guys are trying to pour it all out there and offer full transparency in what you're trying to achieve. And then it's, up to the investor to make those decisions and take the responsibility of those investments.
Yeah. Saylor's a great example. And we fall into this too of like, I think Saylor genuinely believes, for good reason, that he's got the best product in the world. And that his company is screaming value compared to everything else in the S&P 500. For very good reason, because I think the math supports that. And I think that, at Smarter Web, we feel the same way, right? Like we know, we're very confident that our fundamentals are sound, our mechanics are in place, and our positioning is such that we can continue to run the playbook effectively. And if that's true, then this is, in my view, the best thing in the world in terms of what we're able to offer and to our shareholders, because Andrew and I both feel that the best asset in the world is Bitcoin. And as a result of that, the only thing that we like more than Bitcoin is more Bitcoin. And so, this is a Saylor quote I'm stealing blatantly there. But, Andrew phrases it as like, what we're trying to do here is compounding Bitcoin. Like that's the idea of growing Bitcoin per share time after time after time, and then repeating that cycle as fast as you can. So your frequency of compounding is great. Then it's very easy to be confident and passionate about it. And I guess it helps to go through a contraction when you feel confident and passionate about, the value that the company you're a part of provides and still will be able to provide, for the rest of this year and into next year and the year after that. So it's like a super exciting time. And the volatility that, we've seen in the market over the last few months it's exactly what Metaplanet has lived through several times over its 16-month history. MNAV expansion and then contraction, compression. I expect we'll see more of that in the Bitcoin Treasury Company landscape in general, quite possibly synced up globally going forward. We'll see.
Hey JFK, did you have a meme that you might want to share? Sorry, I cut you off. You asked this question, but I was thinking about the Andrew and the in-laws meme.
Yeah. Let's
JFK has been making some memes about us.
The meme master. It's funny because Saylor and Elon Musk have been so vocal on how important memes are and the ability to package information in the most bite-sized format in order to get the highest viral efficiency, right?
Yeah. I believe in that.
What does it say for us?
Well, it was just on the space the other day when Andrew was talking about the share price, and he said, my father-in-law bought in at the top effectively. So if you don't think I'm trying to improve the share price, then yeah, I was like, there's no greater pressure than your in-laws. And then this is just one of our friend Josh.
Andrew's CEO of Smarter Web Company, for those who haven't caught on.
Did you have any thoughts on Josh's? He was a bit unhappy with Saylor walking back his guidance on the ATM facility.
Yeah, I don't know. I haven't dug into that drama enough to really have an opinion. Of course, people are going to have opinions on both sides of the ATM because it's true, right? That like if you don't run an ATM, there's a little less sell pressure in the market, and so you could see how prices might go up, but at the same time, an ATM is the lifeblood of a young Bitcoin treasury company in particular. I mean, Strategy is at a place where they could potentially shift into entirely, fixed income and money market fuel. But for, anyone younger, anyone smaller than Strategy, an ATM is like the most important mechanism in my book for keeping the Bitcoin per share flywheel going. And that is at the expense of that costs that requires some sell pressure, some additional sell pressure in the market in order to harvest that MNAV and turn it into Bitcoin per share growth, which is then in turn why people would invest in that company, right? Like, you need to have that track record. You need to show that continuous execution of those mechanics in order for people to say, I'm willing to pay a 2-3x MNAV, a premium, because I've seen the compounding Bitcoin per share growth, and I've seen their consistency, and I can project that forward, using whatever math they want to do. And I think that's a valuable, a worthwhile proposition, given that math. So it's like, I see both sides of it. Like, the ATM does create some sell pressure, but it is also like the best thing that a Bitcoin treasury company investor could ask for.
Well, I like what Smarter Web and Metaplanet do with the ATM facilities, not selling lower than the previous day's close. And I think something like that, instead of Strategy limiting it to an MNAV, if they did something similar to that, that might kind of help out in the sentiment.
Yeah, totally agree. Sitting on this side of it is interesting because, we talk about like various ideas for how to improve upon the ATM structure. And so far, none of them are better than what we have. We very much like what we have, but there's infinite different possibilities for how you can, your policies you can have in place for it. And I think, it's early days of the Bitcoin Treasury Company landscape. So there will be experimentation, and best practices are probably still emerging. Right now, Strategy's going with that like MNAV bands approach of like what they allow themselves to do in terms of the ATM at certain MNAV levels. And yeah, I think that Metaplanet style, only sell on up days policy that Smarter Web has adopted is a little bit cleaner and a little bit, I like it a little bit better than the bands approach. But yeah, we'll see what sort of best practices continue to emerge there.
I tend to, I was saying before when Josh Mandel was basically saying what he was saying about they should limit the MNAV, I disagreed. And I'm not a shareholder of MSTR at the moment, but I disagree because ultimately the reason that you're investing in MSTR is because they can acquire more Bitcoin over the long run, and that you think that you're going to be able to outperform Bitcoin. And I think Josh was coming at it from a trader's perspective, trying to affect price, and price has nothing to do with it. And I went and said, I don't think Saylor would listen to that. And he did. He obliged. And, obviously Josh has a pretty loud voice, and I respect Josh a lot. He's obviously done a lot of good things in the industry. He knows what he's talking about. But I believe that if you're going to invest in a treasury company other than Bitcoin, the one thing that you're investing in is the treasury company. Above all else, you're investing in their optionality. Their optionality to go and adopt all these different strategies. And I think what Saylor did by putting the limit is just reduce some of MSTR's optionality. And the market didn't like that, obviously. So I don't necessarily think treasury companies should ever be out there reducing their optionality, because that's their biggest asset.
Yeah, I guess it was a cool experiment that I applaud Saylor for trying it. Of like, okay, fine, let's see if we do put this pause on MNAV, like on ATM selling, will our MNAV go up to that threshold level? Because that would be great. And they put that change in place and nothing happened. So I think it was like a bit of a successful experiment in the sense that there was clarity pretty quick that it didn't matter as much as some people thought it would. And then, if it doesn't matter, then yes, having greater optionality is better. Yeah. And
there's so many variables to markets that it didn't matter this time, but in 2026 it might, right? We just don't know. Mate, thank you so much. You've been so generous with your time. I want to close with this question. So what is the number one piece of advice that you have for investors or anyone out there today who wants to be best positioned for this world ahead? And what's one action, book or podcast that you'd recommend?
Sorry, what was that last part?
What is one action, book or podcast that you recommend?
Okay, action, book or podcast. Yeah. I mean, I guess it's as simple as study Bitcoin. Basically, I think that at any point in time, there's some big contrarian bet that most people don't see coming, and a few smart people see coming and are very excited about. And necessarily that contrarian bet needs to be unpopular. It needs to be non-consensus for it to be worthwhile. It needs to defy established wisdom. And with Bitcoin, it's a dead ringer for all of that, right? Like it's exactly the high marks across the board on those dimensions, those things that you should look for. And I have a chart of like your Bitcoin allocation is directly proportionate with the amount of knowledge you have about Bitcoin. So the amount that you have studied Bitcoin. So the more you learn about Bitcoin, the more you end up buying. At least that was my experience. So I think that it's the opportunity for our generation, for this century. Like I think the big story of success for this century is people who took advantage of Bitcoin versus those who didn't. And by take advantage, I mean like learn about it enough to have conviction to take the actions that follow. And in terms of that, the book that was most important to me was The Bitcoin Standard. And that rocked my world. I was coming from a liberal worldview, and that was a very hard book to read. So, I will say that, especially around the middle sections. The first third was a wonderful walk through monetary history and was most of the value in the book, in my opinion. A little bit more politically heavy in the middle third or so, which was a tough pill to swallow. But, I think that as I've come to the Bitcoin thesis, I've increasingly been like, damn, he was right about that too. But, when you're coming from a Keynesian worldview, you don't love when somebody's being really mean to your intellectual, the people you learned about in class. So like Keynes. Anyway, so I think that's the bit of advice I would have is like I think the highest value thing you can do in the world right now is learn about Bitcoin, because it doesn't take that many hours to, in my experience, to develop conviction. And if that thesis is right, it's the big story of the century. So, might as well take that time to find out.
Jesse, Smarter Web has, I think, publicly put out there a Bitcoin target. We'd love to have you back on when you achieve that target, and you can tell us what's next from there.
Yeah, we'd love to. Yeah, we've got a series of targets. We quickly got to 1,000 and then 2,100. Now Andrew's kind of focused on 4,200, doubling that 2,100 number. But, then it's 21,000, and then it's 210,000 Bitcoin, which would be 1% of all Bitcoin in the world. And I think that, as part of my thesis about Bitcoin treasury companies in every capital market in the world, every, top 10 capital market in the world, the winning Bitcoin treasury company in that capital market, I think can get to 1% of Bitcoin supply, because it will be the preferred way by which, TradFi capital flows to Bitcoin in those specific capital markets. So I think that, as of now, Smarter Web is on track to continue in that direction. And so, I'm super excited about hopefully getting to that 1% number.
Epic. Well, you heard it, guys. Stack sats or invest in companies that are stacking sats.
That's right.
Thanks heaps, Jesse. Thank you, JFK. Did you have any closing thoughts or things that you wanted to say?
No, I think if Andrew can hit those targets, Smarter Web will be doing okay.
A good
Awesome.
meme, a very good meme. Yeah, we are doing okay. We hope to be doing very okay.
And thank you for your contribution to the space and all the education and content that you basically put out there throughout your history online. It's very much appreciated.
Yeah, and thanks for having me on the show, guys.
Thank you.
Thank you.